day all. Ira Epstein of Linn Associates with your financial market wrap-up for this Wednesday, the 29th of April, 2020, and the time about 3:15 p.m. in the afternoon. So today we wake up and Gilead Sciences comes out and announces that they've had great results on a drug that you use to treat COVID-19. Now, it's not the knockout drug, but it does change the period of time to get you better, and the results are very good. Then we saw the government come up backing that out. In other words, saying that, yes, they're getting the same type of result. That's the first good news. Then, of course, today was the Fed day, and the Fed came out today with all barrels swinging. They didn't do anything, but they're just letting the market know they have the markets back, and they're not looking to raise rates or do anything new immediately. Their corporate facilities will be open in May. A lot of good news for that, and the stock market responded in a favorable way, as did the metal market. You know, the metal markets are looking at it, and I think appropriately so, that the money's not going away from the market. The base metals, factories are going to open. Better news there. Energy. I've swung gears now into the July Brent and July crude. And the reason is the June contract's just too difficult, too many crazy things going on with the funds selling there. So I think we move to that. In the bond market, you reversed course. You were up to 182.20. You backed off and you got really ugly even in the bonds and notes. So we saw a surge early in the morning and now they're giving that up, a chop market. So let's take a look at the S&P. There's no getting away that this market's on a tear to the upside. The next upside target, the 29,992 area, right by that 3,000 mark that so many others have as a target that the market might want to get up to here. And this is just an area chart of closing prices only. I'm the first to tell you this is the middle of the week. We don't know where the week's going to end up, and it's a weekly area chart of closes. So far up 110.75 points. Where did the market run to today? It ran up to the 62% area on the Fibonacci count. Get much higher than this, and I don't think you're going back under these lows unless something terrible happens in the economy. And I can tell you what the terrible would be. It would be another round of COVID coming at us. It would be that these states that are reopening, they did it too soon, COVID returns. That would be the too soon deal. Another thing could be those states don't get it. We just all see another round of this coming. I'm not saying that's there. So obviously the bulls have proven that this washout, just like in 2008, the market just looks beyond it and looks forward and sees that the Fed has everybody's back. When we come to the June S&P 500 index, and this is just that, this is the chart without any study on it, and here we are with it. The swing line, higher highs, higher lows, bullish. Target, well, one of them could be the 200-day average and the 100. In other words, the 3004 area to the 3014, which ties together well with that weekly area chart of closes moving average at 29.92. What about the Bollinger Bands? They step in front of the market at 29.77. Given that they haven't been hit since other than at the very beginning of this month, I put a lot of credence that that's the number that the pros, the algorithms and the like, will have programmed in to take a hard look at taking some money off the table. In terms of momentum, you locked in again. So now you have, take a look at it here. Both numbers over 80, over 80, over 80, over 80. So what began last Friday and the day before, you didn't have that. You've embedded the slow stochastic. When that happens, as long as the market doesn't first go up and over this high and then come back down, I say that the traders are looking to buy the breaks. They won't like the fact of an outside day down. Barring that, just a correction to the downside, I think they'll be aggressive on the long side until that slow stochastic reading turns down. But that does not take away the fact that I think these are still going to be resistance areas. NASDAQ, same thing. You're embedded the reading. So now on pullbacks, I'd look for the 100-day average to again be the support. Resistance, potentially 92.21, the upper Bollinger Band. This rules the day, so it's taken over the charts as far as I'm concerned. Do we have it in the Dow? Both numbers were over 80 today on the close. They were not yesterday. I'll just show you, not the day before. So no, you're just overbought in that market. When I come to the Russell, you stuck your neck out over, the Russell did at least, over the upper Bollinger Band. Now, each time it's done that in the past, you'll notice it gets thrown back. I don't know that this time is going to be any different, but you can see both numbers over 80 in the slow stochastic. Both over 80, not the day before. Tomorrow's a very important day. If it can embed, then what I think can happen is this market starts grabbing hold of that upper Bollinger Band on either side of it, and with an embedded reading, it can push it even further, potentially all the way up here. So it's catch-up time in this index. This is now one of the stronger ones if it can embed. In the VIX cash, I think that the pros went today and wrote puts. Now, how aggressive they did it, I don't know. In the past, if you went back to last year and you went down to that lower Bollinger Band and you wrote puts, I want you to open up your charts and go back and do a little study. How often did the market revert to either the 18-day average or one of the other key averages like the 100-day, the closest of? Go do it and see what happened on that. It's very interesting. Admittedly, we're at a different level today. We're no longer at a level that was back here in 15 and 10. Now we're at a level that's bordered currently by 38 to 29.76. We're not up at the 85 level anymore. We're looking for whatever a new norm is going to be. So that's why I say I think they're writing the put. When we come to the bond market, remember what I said, this is a bottle that melted, this what's formed by the Bollinger Bands, and now that you've melted in the center of it, what's happening? Whipsaws. That's exactly what I'm seeing. You're not following through one side or the other. You get a higher high and a lower low. Very dangerous chart pattern. Same in the 10-year notes. I would not be looking for anything just yet here. I just see this market whipping around. We'll see if it can set itself straight. And in the dollar index, I will be totally surprised if this market doesn't want to reach down for the 99.03 level, the lower Bollinger Band. The pattern is set today with an inside day that if you just take out 99.40, 8.5, you'll have lower highs, lower lows. The potential set for there, I don't know if it'll hit it, but we'll see if it does. If it's trying to go to the downside, that's the most logical target. And momentum has turned down with it. So the dollar's entered the bear camp right here as I'm reading it. Eurocurrency has entered the friendly camp. Take a look. With the current quote of 108.84, it's over the 18-day average. It's now got a pattern of higher lows, higher highs. The bulls have wrestled control back of this. What would break that? Getting back under yesterday's low of 108.20.5. So those are the readings that I've gotten. And admittedly, just being right up here against that 18-day average, it can go either way, but you're either bullish, bearish, or neutral. This is bullish. That's my statement on it. In the end, first challenge of the upper Bollinger Band in an overbought condition, I think pros take money off the table. What do you need to safe haven from the yen from? So that's the part there. Bitcoin, breakout to the upside. Now, what differs here? This market overbought, and this was Monday. Market on Tuesday, let's see, there we go. Backs away a little bit, still overbought, but today this market's saying, I want to break out. Now, is this that move? It could be. Remember, I've been prepping you since March that you're going to get into this May time frame where this market's going to get all these groupies, if you will, that love Bitcoin, and they're going to start buying this because they think, this is it. Now we've had the correction. We successfully got back under the 6,000 level here. We got back over here even better during this year, and that was the washout. And now at the halving, there's fewer coins going to be made. Doesn't talk about what's already been made, but that. I wouldn't fight them. In the crude, now I've moved to the July, and as you can see, we're at 508 differential. When we come onto the chart of the July Brent, the market is oversold in a downtrend. Dangerous to play an oversold condition. I don't see that changing just yet. It's not trying to embed, is my point. When I come over to July WTI crude, well, what do we have here? We have both numbers under 20 today. Both were under 20 yesterday, not the day before. Tomorrow's a key day in this. If this market locks in the embedded reading, then I think we're still going to see aggressive selling in the U.S. of our WTI product on bounces. Tomorrow's a real important day. Gasoline threw out the buy signal as I see it today. Why? Well, if we take a look, you were just hanging here at this 18-day average. You had made a pattern of lows that were higher. You needed to close over the 18-day average. You got it. Just like I said before in the bottle formation on the other market, this is a pipe. This is not the bottom. That means the resistance, I'm looking to see how formidable it becomes if you can get up to it at 82.32, the upper Bollinger Band. Support in the market now 72.55. It sort of fits in that the market's looking at states going to reopen this week. We saw today the EIA number, and surprisingly, the gasoline supply dropped. So I think that gave this market some idea that drivers are returning to the market in a very limited way, but they're returning. And at this cheap price, maybe they're trying to figure maybe there's more upside than downside. In the nat gas, the battleground is now the 18-day average. You slid through it here, you went back up, now you're fighting back at it. We'll see what the pattern turns out to be. There's no trend here. While the swing line's down, the market is over the 18-day average of closes, and you've worked out. Now, present tense, you're no longer in an overbought condition. So I think this chart's looking for direction. I want to remind you, one of the things we do at Linn is we write about all these market options, the futures, the spreads, the fundamentals. You know, a lot of people don't talk about that. Our firm writes about a lot of the fundamentals. So if you're looking for something that covers all these different areas, well, we talk about it and we write about it. What do I mean by talk? If you get our charting software, try a free sample of it, by the way. You'll hear our media reports. And during the day, we have broadcasts throughout the day where the firm's research department comes out and they're telling you what they're seeing in different markets throughout everything. That might fit into one of the things that you want to look at. How do you get this? Give us a call. You see the number there. My staff is working. They will pick up. Or you can go to our website, and on our website, look under the research area for my research, and it'll explain what I do. Or you can go to the free research, the free offering parts of our website, and that's where you sign up. Our website is not full of our information. Our products are. Our website's a catalog of what we have to offer. I'm Ira Epstein. You have a great day, and I will talk to you all tomorrow.